We got some big news for CoreWeave stock investors, and I know many of you are interested in this company because of its big sell-off and because of its robust growth rate increasing by more than 100% year over year on the top line. So I'm going to share with you the details of these latest developments and what it could mean for CoreWeave stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
One of the latest developments is that they brought on board John Jones, which will join the company as its chief revenue officer, coming from AWS, Amazon Web Services, where he served as global head of startups and venture capital. For newer companies like CoreWeave to attract talent such as John Jones away from Amazon is a big win for the company, shoring up its management team, bringing on board expertise from a company like Amazon, which has been operating the web services segment for a long time. Also, CoreWeave hopes to have relationships with Amazon, and bringing on board one of its former employees will help the company in gaining information on how to deal with large cloud service providers like Amazon, as well as like Microsoft, Alphabet, and the other participants in this category. So CoreWeave's management team also gave us more information about their proposed acquisition of Core Scientific, which was terminated in October. Now, while the deal made sense strategically for both companies, the valuation required by their shareholders was simply not a price that was appropriate for CoreWeave, particularly because the outcome of the transaction in no way adversely impacts their ability to achieve their growth ambitions in the coming years. So this is positive for one specific reason for CoreWeave stock investors, and that's the fact that CoreWeave's management team looks and shows prudence here by not overbidding for this acquisition. They were interested at a certain price point, but if the price point was well above that level, they're willing to walk away, and that shows prudence. And that's the kind of company that investors should want to invest in, a company that shows prudence when making acquisitions, because a lot of businesses, when they make acquisitions, they overpay and it results in poor performance and not realizing the returns on invested capital that was initially forecasted. So instead, they will continue to work closely with Core Scientific on the approximately 590 megawatts of capacity they've already leased from the company. So in the latest quarter, they added 8 new data centers across the US, strengthening their US domestic coverage with additional expansions underway across Europe, including a new major presence in Scotland, which is being developed in partnership with the UK government. Now, CoreWeave is in a very attractive situation where it has demand for its services that exceeds its supply for its services. In other words, it's sold out. And so it has customers waiting. And as it brings on board this new capacity, new data centers, there's customers waiting to purchase that capacity right now. The risk here for CoreWeave stock investors is that the customers it has right now, they signed agreements with CoreWeave, let's say for 2 years or 4 years or 6 years. But the risk is at the end of those agreements, will CoreWeave be able to renew those contracts for another 2 years, another 4 years, or another 6 years? There's a growing risk that there could be oversupply once all of these data centers that are under construction right now, once they all get built and they're all online, that there's an oversupply and the imbalance switches over from being a situation where there's too much demand compared to supply and switches over to a situation where there's too much supply compared to the existing demand. And they allude a little bit to this situation here, saying we are experiencing relentless demand for our platform. Data center developers across the industry are also enduring unprecedented pressure across supply chains. So CoreWeave is experiencing significant demand, and so it's contracting data center developers to build some of these data centers, but they are also experiencing significant difficulty and pressure because there's so much demand in this industry that there's limits on their ability to produce these technologies or produce these data centers. There's limits on the materials, the expertise, the power, the GPUs. Every component that's going into these systems is highly in demand. And so it's difficult to ramp them up and build them because everyone is trying to build them. Or I shouldn't say everyone, but so many companies are trying to build so many data centers so quickly that there's so much pressure on the supply chain right now. So that's one of the reasons why they were affected by temporary delays related to a third-party data center developer who is behind schedule. And CoreWeave's management team said that this will impact the company's revenue in the upcoming quarter, but that it's a delay in revenue, not a cancellation in revenue, that this third-party developer will likely complete the project just in the next quarter instead of the upcoming quarter. So it's a delay of an estimated 3 months of completion of this data center. And this is likely the first of many of these kinds of situations because, as I said, there's so much strain on the system to build so many of these data centers at such large scale so quickly. And so this is probably the first of many of these kinds of situations where the development is pushed out or delayed, or there's some kind of difficulty, some kind of shortage that delays construction or delays bringing online these data centers. So CoreWeave stock has been under pressure in recent weeks. Over the previous month, it's down about 50%. And the market price is down to $75.53. But I think that's an opportunity for investors. I calculated an intrinsic value per share of $121 for CoreWeave stock. So you're able to buy this business at a significant undervaluation right now. But that's one part of the equation here with this investment. The other part of consideration is that CoreWeave stock is one of the riskiest stocks you can buy right now. If you look on the risk spectrum of lowest risk stocks, which include companies like Procter and Gamble, McDonald's, and Colgate Palmolive, and those kinds of companies are on the lower end of the risk spectrum. Companies like CoreWeave are almost all the way on the other side of that risk spectrum where they are of the highest risk. But these kinds of companies at the highest risk level also offer the potential of extremely high rewards. And so this should be considered for investors that are willing to tolerate the higher risk in the hopes for achieving significantly elevated returns. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.